Comment on Lupin specifically?
I think Lupin has started doing well after a very, very long period of underperformance. The US market has been rewarding them in the recent past, and that's getting pretty much reflected in their numbers and the performance in the market even. So yes, if you are a little aggressive investor with appetite for risk and volatility, you can go for a Lupin or even a Sun Pharma.
Lupin has been having a pretty good day. Look at that intraday chart. It's up about 23.5% in the last 3 months. And the reason is because of its numbers. Its quarter one, April to June, has been pretty good. 78% up in profits. Margins have expanded. A strong June quarter, beating street estimates moreover. So we spoke with the executive director of the company on the quarter gone by and the road ahead. Let's listen into a slice of that conversation for a company that is definitely in focus today.
We are very pleased with our results, and as you can imagine, it is actually because of buoyancy on the top line. At the top line across all the geographies, we have done very well in North America, where we serviced the previous year. We had a growth of about 28%. India also saw a growth of about 17.5%. We serviced the previous year. Likewise, you would see the emerging markets, the other developed markets, Latin America, and of course the API segment also have done extremely well. So the introduction of newer products, pivoting to more complex generics has really paid off very well for us. If you look at America, the respiratory products, Albuterol and Spiriva, continue to do very well. But this quarter, of course, we had the benefit of Mirabegron also. So essentially good results coming in from the top line buoyancy, but equally there has been a lot of focus on controlling the costs across various lines. So we have been focusing on, in fact, looking at gross margins expansion, looking at alternate vendor development, looking at routes to synthesis, and very much productivity across all lines, be it on the sales force, be it at the R&D level and the like. So all of this has resulted in a very good EBITDA margin for us.
Just give us a sense of you've provided 75 crores for Glumedza. Is the entire settlement amount been provided in this quarter, or are you going to spread it out over the next few quarters?
No, with this, hopefully the entire Glumedza story is over. So this is another class suit in America that we settled, and with that we are fully done.
Hi, Mr. Ramesh. This is Varsha here. Good to have you. I just wanted to ask you on US business outlook. So we have seen the US has reported almost $27 million in quarter one, and in FY24 we did see the annual revenue of around $815 million. Now, do you foresee this reaching to $1 billion in the medium to long term? And if yes, what are the drivers for this growth?
Yes, we do believe that we have a very strong pipeline actually to address the American market. So as we've been saying, we are kind of pivoting to more complex products. And given the nature of, in fact, the complexity associated with it, it's not going to erode very fast. And from that perspective, it will continue to have a good run. Besides that, we expect, in fact, a lot more products to be introduced. Even during the course of this quarter, we have Mirabegron, which will continue. We also have prednisolone, ophthalmics products. We also have Slind and all of this, which should come up. And going forward, given the emphasis on the respiratory products, looking at, in fact, the injectables, glucagon, Risperdal Consta, and others which could get introduced in the medium term, I would say that certainly $1 billion mark is certainly within our reach and more.
Also, coming to your margins, so you had guided 20% sort of margins in FY25, potentially increasing to 23% in next 2 years, but we have already seen that 22-23% mark this time. So is this sustainable, and can we grow more from here?
So two things that I'd like to flag off. So there is, of course, the one-time Glumedza settlement that impacted us about 75 crores. But you also recognize that our R&D expenditure is on the lower side this quarter. We service what we kind of guided the market. I do expect that to step up. So if you were to look at R&D of 350 crores and stepping it up, in fact, the last quarter is about 430 odd crores. So there has been a step down in that regard, but we do expect things to go up. The R&D spendings to go up, and if that were to be the case, I would rather guide prudently, conservative, and I would say whilst we did guide for about 20% I would say about 21% would be fair at this stage. There are headwinds, one should not deny that. There are headwinds possibly, because of geopolitical tensions across the globe, the Red Sea situation and the like as well. So we need to take cognizance of all of this whilst we guide.
No, why I was asking this, because 80% of the new products that you are going into is non-oral, which is a kind of, high margin product. So that's the reason I'm asking you that can we see an uptick in margins?
The fact of the matter is that we have also been, we have got into adjacencies in the recent past. So the core business, if you were to knock off, in fact, the impact of adjacencies is already above the 23% mark. And that was, in fact, it's been the case for about a year. And we are trying to, grow those businesses as well. From our perspective, if you were to take an all-inclusive EBITDA margin, taking into account the non-core businesses also, I think it would be fair to state that it will certainly increase, but I would still guide for about 21% for the current year.
Ramesh, where do you see R&D as percentage of sales for FY25? And when you say that R&D may go up in FY25, what is the kind of pipeline that you're working on?
R&D, you would all recognize, is actually the bloodline for the future. From that perspective, it's important for us to invest. And we are pivoting to more complex ones. We've been doing this for some time. So the spend on respiratory products, the complex injectables, biosimilars, that emphasis will certainly continue. As a percentage of sales, between 7.5% to 8% would be the norm.
Mm-hmm. Give me a sense of the Indian business, because we've seen good growth happening there as well. What's driving growth here in the domestic market?
I would say that it's actually traditionally we've done very well in cardiovascular, diabetes, respiratory, and of course, the women's health, gynecology products, on multivitamins. And GI space, so that focus will certainly continue. We added about 1,000 odd people last year to our sales force, and that's paying off right now with an increase in productivity and the like. With newer products being brought in, so we guided for a growth of over 25% vis-a-vis the market, and we've been able to sustain this quarter as well.
You're sitting on a net cash of nearly 20 crores at the end of the quarter, compared to a net debt position in the previous quarters. Do you see now you are in a phase of constant cash generation, and will that be also be shared with the shareholders going forward?
Yeah, you're right. So we did turn to be a debt-free company at the end of last quarter. It's a very small surplus that we're speaking about. But you would also recognize that we are an acquisitive company. And from that perspective, we would be looking at, in fact, M&A opportunities that would come to us both in India and other parts of the globe as well. So, of course, we also believe in the philosophy of trade. It's important to actually have debt to kind of increase the ROE for shareholders. So we are not, shying away from that. So whilst we do have a surplus at this stage, it might turn to be, to be a debt. We'll have debt soon enough on the balance sheet.
Mm-hmm. So, which are the areas that you're looking for if you're looking for inorganic growth?
We have made our intentions fairly clear. We'll be looking at anything which is strategically important for us from an India perspective. We're looking at small bolt-ons in areas that we think is necessary in other parts of the globe as well. But equally, we have set our eyes on specialty, and that we think would be the way forward for us.
Right, that conversation with the Lupin management, Mr. Ramesh Swaminathan of Lupin. Time to slip into a very short break. On the other side, we'll discuss the realty sector on the back of indexation amendments, of course, as well as more developments, as well as certain specific sectors. We'll focus in on some of those. Stay tuned to NDTV Profit.